This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil edged lower on Wednesday after slumping in the previous session, weighed down by concerns about weak demand due to the state of the global economy and China's rising COVID cases. Brent futures for March delivery fell 43 cents to $81.67 a barrel, a 0.5% loss, by 0700 GMT. U.S. crude dropped 39 cents, or 0.5%, to $76.54 per barrel. Both benchmarks plunged more than 4% on Tuesday, with Brent suffering its biggest one-day loss in more than 3 months.
Top oil exporter Saudi Arabia may further cut the prices for its flagship Arab Light crude grade to Asia in February, after they were set at a 10-month low this month, as concerns of oversupply continued to cloud the market. State oil giant Saudi Aramco may cut the official selling price, OSP, for the medium sour grade by about $1.50 a barrel in February, according to 4 respondents surveyed by Reuters, in line with the move in the Dubai benchmark. That would drag the February Arab Light price to a level last seen in November 2021, and about $1.75 a barrel over the Oman-Dubai average.
Moving on to the top news in the energy sector.
China has raised its first batch of 2023 export quotas for refined oil products by nearly half versus a year ago, China-based consultancies said on Tuesday, to spur refinery output, capture strong export margins and adapt to slow domestic demand. The quotas could encourage refiners at the world's top crude importer to process more crude and keep fuel exports at record levels in the first half, mitigating the impact of possible cuts in Russian diesel exports when European Union sanctions take effect in February. The government has released 18.99 million tons of quotas to cover mostly gasoline, diesel and jet fuel exports, up 46% versus 13 million tons allotted a year earlier, reported by consultancies JLC and Longjung, both of which have closely tracked Beijing's fuel quota policy in recent years.
Pakistan's government has ordered all malls and markets to close by 8:30 p.m. among other measures in a new energy conservation plan, the defense minister said on Tuesday, as the country grapples with an economic crisis. Pakistan's foreign exchange reserves barely cover a month's worth of imports, most of which are accounted for by energy purchases from abroad, with funds expected under an International Monetary Fund (IMF) program having been delayed. Khawaja Asif told journalists the cabinet approved measures to shut markets, including restaurants, aimed to save the cash-strapped country about 62 billion Pakistani rupees, $273 million. Next, we have the top news in metal markets. Nickel prices on the London Metal Exchange, LME, jumped more than 6% on Tuesday to their highest in more than 3 weeks on expectations that a large short position maturing in January would have to be bought back, metal traders said. Declining volumes and liquidity, together with low stocks, has led to high LME nickel prices this year, pushing up costs for industrial users already grappling with surging inflation. Used mainly to make stainless steel, nickel is now also a key material for electric vehicle batteries. 3-month nickel hit $31,975 a ton, its highest since December 8, before falling back to $30,970 by 17:03 GMT.
Iron ore futures slipped in volatile trade on Wednesday, as COVID-19 disruptions and lingering concerns over weak real estate market in China outweighed optimism around the country's reopening and economic stimulus measures. The most traded May iron ore on China's Dalian Commodity Exchange ended daytime trade 0.4% lower at 846 yuan and 50 fen, $122.94, a ton, surrendering early gains. On the Singapore Exchange, the steelmaking ingredients benchmark February contract was down 1.2% at $114.70 a ton, as of 0713 GMT.
We will now look at the top news in the agricultural.
India's palm oil imports in December jumped 94% from a year earlier to a record high for the month as palm oil's higher discount to rival vegetable oils led refiners to raise purchases during the seasonally weak winter period, 5 dealers said. Higher imports by India, the world's biggest palm oil buyer, would help top producers Indonesia and Malaysia cut their inventories and support benchmark palm oil prices, which are trading near their highest levels in 5 weeks. India's palm oil imports reached 1.1 million tons last month, the average estimate from 5 dealers with trading firms showed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.